Hey folks, welcome to Thursday, the 14th of October 2021. And last night we have seen very little out of the Fed. We are on target to taper a total of 15 bill in November. So looking forward to that meeting, the 3rd of November, and expecting quite a lot of volatility over that meeting and in the lead up to that meeting and after. What we saw as a reaction in the markets has been a pretty decent bid across equities since the data and through the Asia Pac session. DAX, NASDAQ, SPOOs, Dow, all up. The dollar down 0.24% in Europe here. It's about 9:48 a.m. And so, with the dollar coming off of that magnitude, you are seeing, euro up 0.24%. It's on the screen. Cables up 0.5%, and gold new highs back up at 1798 even as I speak. So, oil as well has recovered the sort of consolidation that it's been kind of compressing down into. And yeah, I mean, let's have a look at the charts here and really see what I'm talking about. And so you can see on the SPOOs, sort of yesterday's open selling down to test on the 43.21 quarter, which is a level I was definitely talking about yesterday and for quite a couple of days in a row now. And of course, we're bid up from there. Get on the chart calculator. We're actually from that low. We're up. Yeah, 1.5%. Crazy, lovely stuff from equities. But we're pushed into the 50 EMA here. I don't see that as being a problem for this market. Just about to do similar on Dow, pushing up to the 100 EMA on DAX as well. You can see that sort of gap open on trade on the DAX, highlighted in yellow here. Of course, the DAX electronic trade reopens 1 second after midnight, as opposed to CME markets and US markets opening at 2300 hours the prior evening. So that's the gap here. We closed on trade. Well, actually, technically, we closed on the trade here at about 9 o'clock. So I'll have to update that on my DAX, but there is certainly a gap below, and you can see during the Asia Pac session, just really well supported on that opening gap open price. Multiple occasions excess on the lows on this 60-minute chart and bid up. So destination for me is 100 EMA and 15,439 is above, complement with the 50 EMA. Euro, we were talking about this morning. If we look at, well, if we're going to look at the euro, we've got to look at the Dixie. And here it is on the Dixie, on the weekly bars, the resistance that we've seen on the tops on this mega trend. I'm not going to load up where this trend comes from, but it's way back here. I will load it up for tomorrow. But essentially, we just cannot hold any trade above on this trend. You're seeing the Dixie here, that trend in green, as you can see on the 60-minute, just really not able to do much with trading above there. And of course, then yesterday it was just on the oil pit open around 2 o'clock. We pushed down below, and it's been one-way traffic ever since. So trading 93 spot 82s, I think 93 spot 73 to trade, which is the high of the week of the 16th of August. And I think that's going to be a bit of a formality check off, and we will press down to 93 spot 44s. And I think if you ask me, which you have because you're watching this video, I think it's going to push to 92 spot 50s, and that's a hell of a trade on the euro. I would rather be on the far side of the November 3rd Fed meeting to make a statement like that. But, really just going with what I'm seeing technically here, we're just not able to hold on this trend every time we get back. And I don't know why it would be any different this time. So, prior we saw the stand back from that trend went down to, well, pushed down almost 4%, pretty much 4% on a pullback. So, if we bring that over here for a pullback off of that recent high, That's going to put us down at 90.80. Now, I don't know if we're going to get a 4% pullback from here, but you have to go with what the market is telling you and not really what you think may or may not happen 1, 2, 3, 4 steps down the line. So with that, right, with that, we've got this euro contract. Well, it's on the burn to the upside. Um, Similar uptrend and compression downtrend in the euro. Um, yeah, it's quite a busy chart, I must admit, but some key levels on the weekly to be aware of here. First stop 16,560s on the upside for the swing, based off of the support we found really on the 15,645s. You can see that, I was talking about this. I was on the longs looking for this to play out actually a bit too early, I'll have to admit. So as long at this point here, took something out on the top to cover my stops, got stopped, went for it again, and just couldn't stomach it, and of course then, yesterday about 10 minutes before the pit open, then off we go to the races. Positive. Well, I wouldn't say positive. I would say strong figures on CPI yesterday out of the US, and I don't think these figures are going down at all. Transitory, fine. Transitory, well, what's the timeline on transitory, boys and girls? Well, Jamie Dimon would tell you that, it's probably 3 quarters of higher inflation. Or, so 3 quarters. I mean, we take trades in the day time frame here and the week and the month time frame, 2 to 3 quarters, you're looking at 9 months of high inflation. I'll buy that story. I think Jamie Dimon knows a thing or two about these markets. So, with that, you're seeing gold on the bid as well, and why not, right? So, I mean, gold has been a tricky one. I've been staying away from gold. One of the elite team members was kind of focused too much on gold. That's cable. We don't want to look at that right now. It is doing great though. Um, Focusing on gold a little bit too much. The support really ultimately coming in 1752s, but the reason why I bring up gold and the Luca is because really trying to focus on that trade was tricky, right? And so going down to the 60-minute bars, right? I was just saying, well, it'll be meaningful if we break out of this sideways consolidation range, and then you can go with the trends. Now, yeah, we did break out several times, but it was unsustained, right? Unsustained buying. We just came back, got sucked right back into the low of the range, then bid again, sucked back in, bid again, sucked back in. All right, and then yesterday, we were up, I think, 1.8% on gold off of the 2 o'clock marker here. And really, it was very hard to get on that trade. Going back to like a 15 minute, for example, still very hard to get on that trade. You got to be watching it like a hawk, and foregoing trading any other markets where there has been phenomenal opportunity in equities and oil, or you're just focusing on trying to, shoot this small bird out of a big sky, in gold, waiting for that one moment. Well, okay, fine. Either which way, great day for gold yesterday. I think we can continue to go up. 200 EMA set to trade 1802s on the upside. I think the markets are going to now start to admit that inflation is not transitory, and gold, the old gold trade is back on, and you're seeing that here on this push yesterday. And so, going with the longs, well, the pullback that we saw at 3 a.m. Asian session, really well supported on that 1788 spot four. I mean, yeah, look, I'd love to be on this trade, but I'd also love a stable of multicolored Ferraris, but that's just not going to happen yet. So, um, here we are working through this range. I do see this as a big block line of a sand. Why? Well, first of all, it's the high double tap 21st, 22nd of April this year. And you see that's the high of the range. The low of the range is actually coming in anywhere really. You see these significant, oh yeah, sorry, it was here and this area. Now, why do I have this on? Because you see a lot of excess on the lows when this was acting as support all this excess on the lows. And so now I'm really just wanting to monitor, then we had excess on the highs as resistance, but now we're working our way up through it again, right? And so when we have that context on this area in gold, I just want to be mindful that if we should push, and I'm thinking that we are going to be generally now supportive in this area, well, I don't want to be buying into the highs. I actually want to see a high print on the range and then pull back to the lows and then look for the longs for continuation to now push above, and what will probably be something like this. We'll have to push above this zone and then try and prove this as support, and you'll see a lot of excess now pushing back in after that occurrence and then eventually holding for the move to continue on. All right. So yeah, let's keep an eye on that as we go on with these markets. That's gold. Uh, yeah, all right. Equities, NASDAQ, get it up on the daily and on the hourly chart here, center left of your screen. As I said yesterday, the multiple occasions we've traded onto this trend. I mean, if the trend is your friend, and this certainly has been a friendly trend in the NASDAQ from the first touch down here. Well, let's take from the most recent touch on the trend. We're up 3.28%. You're doing a lot better than what you're going to get at the bank or the post office simply by taking these high probability trades. Yeah, you're waiting a long time for it, but you know what? A lot of people are putting billions at risk just to make 2 or 3%, right? So, really good activity here. Did talk about this continuation of the up yesterday in the pre-US video. I think we can continue to go up today in this session, and you are seeing we're up 0.8% on NASDAQ at market right now. What is this? I think that's the 50 EMA set to trade just above, 14,969s, just above the R2 on the day, and I think we should trade into the 14,987s before finding some sellers and people taking some profits into that. But certainly, I'm not looking at weak markets here. I am not looking at weak markets. SPOOs. SPOOs on the daily. Yeah, again, I mean, the support that we had yesterday touching down on the open, right? I talked about this in the pre-US video, all right? I talked about this touching down on the open to the 100 EMA in this zone, 100 EMA, complement with this 43.21 quarter support. All right, that is a beauty of a trade. Let's just have a look at how much it blew the level by to then the level blew by 12 ticks on the level to at market. Right, let's just take it at the 50 EMA. So the 50 EMA, that's a 21 to 1 reward to risk. 20 to 1. All right, 253 ticks. Just let me see. I've got set to two contracts. One, so that's $3,162.5 per single contract traded. It's a belter of a trade, and it is going to keep going on. Yeah, we may get a pullback, 43.59 half. I think that will wholly be very supported should we trade there, and I think targets now should be set for 43.13 and a quarter, notwithstanding headline risk. Okay, so if Jerome Powell comes out and has a heart attack or something while he's visiting the print cartridge shop, I don't know. Something like that could spook these markets. Who knows? Who knows what's around the corner at any given time for these markets? But we're on the up. It's a bit of a face-off between Sam North and myself. Sam's bearish. I'm bullish. I can't remember the last time we were at odds on calls on these markets. I'm looking at the Dow on the daily. Let's just get this up. Yeah, here at the Dow on the daily, a trickier one to find a decent level for now. To be honest, I mean, you could easily be looking at this level here, the low of the 19th of August, 34,373s, catching a bit of a bid this morning, but we have put in 0.5% up on the session. Really, once we push up here, you could see that really at about what was this, 6 a.m. holding the bid, 34,373s, and up we go. 50 EMA, 34,500s to trade. I think a pullback into this area, the 6 a.m. area, 34,373s, and what was this other area here? 353s. Yeah, I think that's going to be wholly supported, and we should, bounce from there as we have done this morning, and keep going up. I just don't see this 50 being a problem, this 50 EMA. I would be targeting 34,775s, and actually to test on this trend over the coming 2 weeks, let's say. So that's on the Dow. The bund, let's not look at the bund, which is doing great this morning, but let's look at TNotes, right? So we have a bit of a knot on TNotes. I talked about this the week of the 12th and 19th of April. This year, sort of a high there. It's given us a bit of a knot, and then the low of the 27th of September. It gives us a little bit of a line in the sand, right? And then I'll go to the 60-minute, and we'll just make this chart a little bit more visible. And you can see here that quite a bit of activity on this area, but wholly unsupportive. Came back to test its resistance. Food for the scalpers here. A couple of ticks. But look what's happening now. We're testing the bottom of this zone, 131.7s, as support, right? So if we're testing on support now, I do fancy the real yield dropping, T-notes getting up. I think R1 is a perfectly acceptable target for today. But you know what? I'm not a big bonds trader, to be honest. It's not my jam. So I'm gonna just do my job of giving you the context here of the market. But bounce of some magnitude is on the cards on T-notes. I think the swing trade short 130.10s should be targeted for the downside. So yeah, that's it on the bunds. And then last but never by means least, we have oil. On the weekly chart above here, you can see it's just, you can't get in front of this thing. You just, why would you? Crazy stuff across the equities, oil individual equities, the MLPs. I do have a video I'll share on the Pro Trader channel about MLPs, but they're all having crazy good times this week, breaking out of some consolidations. Only actually last night, a couple of these MLPs breaking out of 2-week consolidation ranges to the upside. And I would expect further running on those MLPs should we manage to even, hold above the 80-90s today. I think we can just hold here. We're 1% up at market. I think that breakout is going to continue. You don't really want to see oil revisiting 79.48s for a third, well, really technically a fourth test. You can see that level just coming into play so many times here. 1, 2, 3 times this week. Well, 3 times actually. 3 times yesterday, or sorry, Tuesday. Tuesday. Oh, sorry. Once yesterday and once on Tuesday. So yeah, what do I like on oil? Let's see. I think I'd like to be a buyer on a pullback around 80.64s. So that's going to be sort of a test back down here on the trend. I'm not sure if it's going to test pivot again. How can you be sure in these markets, right? But I like around, a little bit of excess below the 90s for the longs. And pretty much that's, we've broken out, right? And so that would be the pullback test and get on board the train, and up we go. I'm sure some of you want to say, hey, Tim, when are we going to get to $100? I have no idea. And I'm not going to be called out on that one at all. All right, that's it for me for today. If you haven't subscribed, click subscribe on YouTube. That'll be fantastic, and you'll get an alert every time I come live with a session. And please do join us in the Pro Trader Room or the Trader Room on the Duggan Capital Discord. For more information about that, go to duggancapital.com and sign into the website, which is signing in is for free. All right, have a good session, and I'll speak to you tomorrow morning. Cheers.